Today we'll talk about a company that bet its entire future on virtual universe. Well, you have guessed it right. Today we're diving into Meta's colossal $300 billion gamble on the metaverse. Is it a visionary leap or is it a costly mistake? Let's find out. Welcome back to WildPodX, Tony here. Today is 17th of March 2025. Here on this channel we break down everything related to money, investing, crypto, and psychology. If you want to stay ahead in finance, be sure to subscribe. Let's kick things off with a quick market update. Bitcoin is currently trading at $83,000. Ethereum is at 1,900, and Ethereum's Fear and Greed Index is currently at 33, indicating fears in the market. Remember Warren Buffett's wisdom? Be fearful when others are greedy, and greedy when others are fearful. So do you agree that this might be a good time to deploy some extra cash into buying some Ethereum? Let me know in the comment below. Over in the stock market, Meta, formerly Facebook, is priced at $607. Tesla is at $250, with a very long wick on the weekly chart. So we're going to watch closely and see if it's going to continue rebounds. Right, let's get back to today's morning deep dive. Mark Zuckerberg has made some incredibly good bet in the past. He saw the social media wave before MySpace faded into obscurity. He snatched up Instagram for a mere $1 billion, a deal that looks like outright theft in hindsight. He paid $19 billion for WhatsApp, predicting that messenger app would dominate global communication. Love him or hate him, the man knows how to spot trends. But now, he's all in on the metaverse. Meta has already torched over $50 billion trying to bring this virtual utopia to life. In January, Zuckerberg announced their plan to spend between $60 to $65 billion in 2025 alone. And the total metaverse investment could balloon up to $300 billion over the next decade. That's the GDP of New Zealand. And the problem is, nobody seems to want to live in Zuckerberg's vision of Ready Player One. This might be slightly controversial, but Meta really isn't a tech company. It's an advertising empire dressed up as a social media business. Pretty much all of their revenue comes from selling ads, which means the entire company exists just to keep you scrolling, clicking, and occasionally rage commenting. But cracks are forming in this system. Apple's iOS privacy update slammed the brakes on Facebook's ability to track users across apps, wiping out an estimated $10 billion in ad revenue alone. Governments worldwide are tightening data collection rules, making it harder for Meta to do its signature move, turning user data to pure profit. And the worst of all, Facebook itself is becoming irrelevant to younger users. Gen Z barely touches Facebook. To them, it's where their parents go to share conspiracy theory and minion memes. Instagram and WhatsApp are holding strong, but TikTok is devouring attention spans at an alarming rate. And if young users aren't engaging with your platform, advertisers eventually will follow them out the door. When Facebook rebranded to Meta in 2021, it was clear that Zach wasn't just interested in VR, he wanted to own the digital world of the future. But the problem is, the metaverse is still an answer in search of a question. Horizon Worlds, Meta's grand VR social experiment, is mostly empty. Even their own employees barely use it. The Quest headset are selling, but nowhere near iPhone levels of adoption. Zuckerberg keeps saying this is a long-term play, but so far it looks like he's spending billions just to build a slightly better version of V Sport. Realizing that AI is now the hot topic, Meta is scrambling to pivot. They've started building their own AI training chip to reduce reliance on NVIDIA. These new chips, developed in Taiwan's TSMC, are designed to power Meta's recommendation engines and AI products. They're aiming for a full-scale production by 2026, hoping to slash infrastructure cost and boost efficiency. But here's a problem. Meta isn't an AI leader. Microsoft have OpenAI, Google has DeepMind, and Meta has AI-powered Instagram filter. Their best AI application will resolve around one thing: improving ads targeting. They aren't building the future of AI, they're just trying to keep their cash cow alive. To be clear, I don't think Meta is collapsing anytime soon. They have a massive user base, a strong cash flow, and a CEO who will stop at nothing to make his vision a reality. But at the end of the day, they're still an ad company with an unproven expensive side project. Meta could remain a cash cow for the next decade, but personally, I would rather invest in companies that are shaping the future, not trying to convince us to live inside a virtual one. Now let's take a look at today's top news. This week, the FOMC meeting is expected to maintain current interest rate, providing stability to the economy. However, all eye will be on Chairman Jerome Powell's statement, as investors seek hint on whether the end of the current quantitative tightening is in sight. Any sign of the shift in monetary policy will have significant implication on the financial market, especially in terms of inflation and economic growth projections. The second news. Recent analysts suggest that Bitcoin's recent shakeout does not signify the end of its 4-year cycle. While the cryptocurrency has experienced notable fluctuation, experts argue that this is just a phase in the regular market progressions. Many believe that these price swings are typical for Bitcoin's volatile nature, and long-term holders are confident in the cryptocurrency's continued potential. Market observers are closely watching how Bitcoin responds to these market corrections in the coming weeks. In the last news, investment management giant BlackRock now holds a staggering $47 billion worth of Bitcoin, further highlighting the growing institutional adoption of cryptocurrency. BlackRock's significant Bitcoin position is seen as a signal of increasing confidence in digital asset as a store of value. The move is reflective of a broader trend where major financial institutions are steadily entering the cryptocurrency space, possibly laying the foundation for a more regulated and mature crypto market. That's a wrap for today's news. Be sure to subscribe for daily updates in weekdays. Stay invested, have a lovely week ahead, and I'll see you tomorrow.